Welcome back, I'm Racky Ryan. Today I'm going to be valuing Nvidia stock. I'm going to derive a price target for Nvidia, so stick around. You're going to want to see what my model values Nvidia at. Also, don't forget to subscribe. The majority of you are not subscribed. It is free to do so, and I'm going to be uncovering undervalued stocks for you. So what is Nvidia? Well, if you're like my father or my girlfriend, then you might not have any idea. But since you clicked on this video, you probably already have some sort of interest in what Nvidia is. Nvidia is a very large tech company that makes graphics processing units, also known as GPUs. The gaming industry is what GPUs is most known for. However, they are also heavily used in artificial intelligence, in cryptocurrency mining, for video software, and also self-driving cars. All of these industries have one thing in common: they consume a lot of data. And I think GPU usage is going to increase as the world continually expands its volume of data. If you still have questions about what Nvidia is or what GPUs are, I'll leave some links in the description below. However, this video is about valuing Nvidia stock, so I'm going to go ahead and jump into the DCF model and do that for you. Okay, so I pulled up the financials on Nvidia. So the way that my model works is I'm going to take the free cash flow per share from the prior year. Then I'm going to go back 5 years in order to get the compound annual growth rate. If you don't know what compound annual growth rate is, there is a video you can watch after this. Then I'm going to project out what I think the future compound annual growth rate will be for the company. Then I'm going to come up with a few assumptions for the discount rate and the GDP growth rate. These are both metrics in the model that allow me to value the stock. At the end, my model will come up with an intrinsic value, which is what the stock should be worth today according to the data. Then I'm going to compare it against the current price, which is going to tell me whether the stock is overvalued or undervalued compared to its intrinsic value. So last year, Nvidia had free cash flow per share of 6.77. 5 years prior, the company had 1.79 in free cash flow per share. This gives a compound annual growth rate of 30.48%. So assuming the compound annual growth rate stays the same, using a discount rate of 7.5%, which is the annualized return on the S&P 500. So why do you use a discount rate? You have to use a discount rate because I'm comparing the stock against a benchmark, such as the market. Your goal in investing is to beat the market. So you have to discount the stock in order to compare it against the market. Next is the GDP growth rate. This is included in the discounted cash flow model because you have to assume that the economy is going to be continuing to grow at a certain rate. And then this is going to give you your intrinsic value of $451 per share. Nvidia is currently trading at 505.44, 505.44. So that is going to give you negative 10% upside. In theory, according to my model, the stock is 10% overvalued. So I'm going to run the model for 3 scenarios, and now I'm going to include the same numbers for the free cash flow per share, so I'm going to enter those now. Now, if you're very bullish on Nvidia, like myself, then you might think that the compound annual growth rate is going to continue at a higher pace than it has in the past. The reason being is the company has its hands in cryptocurrency mining, artificial intelligence, video editing software, a lot of different things that are extremely bullish for the future of society. Let's give it a 35% future growth rate using the same discount rate, 3% GDP. This gives an intrinsic value of 533.15. It is currently trading at 505.44. So that gives you 5% immediate upside. So in theory, the stock is undervalued by 5%. Now, if you come up with a scenario in between those two, so let's say 33%, continue with the 7.5% discount rate, GDP growth rate stays the same, then this gives an intrinsic value of 495.89. It's currently trading at 505.44. That is negative 1% upside. So this stock is pretty much fairly valued under those assumptions. So it really just matters what you think the stock price is going to be worth in the future, or what you think the company will do with their revenues, whether you think the company can continue to grow very quickly, etc., etc. The free cash flow per share has been steadily growing, which is a great sign. So again, I like this stock for the long term. I think Nvidia is going to be a buy in my opinion. I am interested in buying some more shares of the stock. I do own Nvidia shares already. Stock has been flat for about 6 months, but then it raised up to about $615 per share, and it has traded down since the market has been really giving back a lot of tech gains. It did hit a recent low of $463 per share. The stock could continue to go lower, but in the long run, I do like Nvidia. I do already own shares of Nvidia, so again, if the stock goes below $450 per share, I'm for sure going to buy more.